And then the progression from the capital raising side is, you start with your family, basically, people that know, like, and trust you. And then you go to friends, and then you start going to friends of friends, friends of family. And then very quickly you realize that you run out of capital. You've tapped out your entire network. And then you need to start going to people that don't know you. So how do you do that? You got to build up a track record. You got to be professional. You got to have very good investor relations, and you got to put yourself out there, like this podcast, right? Mm-hmm. And then you start raising from retail investors. And these are going to be your high net worth individuals. These are going to be your accredited investors, right? And they make over $1 million net worth, not including their house, or their income is $200,000 to $300,000 for the last 2 years, depending on if they're single or married. From there, you could stay right there. That's kind of where we've been parked for a long time, because it's really great people, very flexible in how you do terms. But eventually you start getting the big boys coming and knocking, saying, hey, we would like some of these returns as well. But our minimum check size is 10 million or 20 million. And you're saying, well, I could build a whole self-storage facility for 16, and I'm going to put 70% leverage on that. Mm-hmm. So how am I going to put your 20 to work? And that's when you start going into the fund route, and you start dealing with more of these sub-institutional, institutional investors, pension funds, family office, et cetera. So right now we're right on the cusp of, we have a little over 800 retail investors, and now we're starting to get, some family offices that are coming in and trickling in checks as well.